As the historic fallout from the FTX meltdown continues to wreak havoc on the industry, some are asking, is crypto broken? Well, maybe. The technology, however, is not. Crypto can't exist without blockchain, but blockchain can exist without crypto. As we know, in essence, blockchains are a type of database which allow information to be recorded and to be shared. Once data is recorded, it can't then be changed or deleted, and that of course means the technology is useful for all sorts of things. Finance has been of course where most attention has been focused, but data security, supply chains and the metaverse are also seeing huge investment and huge innovation too. And we've still only scratched the surface of blockchain's potential. So while the FTX saga has caused a massive erosion in trust, especially where crypto is concerned,
it says nothing or barely anything about the technology side, about the innovation side. Everything that has happened is really limited, and it's hard to see this because it's all mixed up. It's limited to just the financial trading side, moving, dollar from, hand A to hand B. And what's happening in the background is there's still incredible technological development.
Jonathan Miller of crypto exchange Kraken says that although we are seeing bad decisions and bad business models being exposed, the fundamentals of blockchain technology remain the same.
What will be the case is that you'll see the technology being used and continue to be used, and we keep seeing big names using it. And right now, I think the way, and this is very positive, the way people are looking to use this technology is almost in the background of their services. Nike most recently released a product that some people might not know uses NFTs, but it happens to be the best choice, the best technology for the particular job.
Now, he's talking about Nike's Swoosh platform, which the company says is designed to create a like-minded community of fans of the brand. Something like that could be the way forward, while high-profile blockchain-based metaverse projects like Decentraland continue to struggle. According to DApp Radar, Decentraland has currently less than 700 daily active users. Fabian Astic of Moody's Investors Service says that where finance is concerned, there's a very important distinction to be made.
Crypto finance and cryptocurrencies are not the same as the broader digital finance. They are just a subset of digital finance. So digital finance is essentially finance, but enabled by new technologies like blockchain.
That includes the tokenization of real assets like bonds, equities, or commodities into digital tokens that can be represented, stored, exchanged, and tracked on a blockchain. Both Fabian and Jonathan see massive potential for growth here.
Even if all cryptocurrencies were to disappear, and I'm not saying they will, but if they disappeared, you would still have other active components of digital finance supported by blockchain technology, because it's really all about efficiency. Blockchain can help replace parts of today's financial system that are slow, expensive, and supported by legacy applications, really. That part of digital finance is here to stay. It will not be affected by the current FTX developments, and it could grow to trillions of dollars within the next few years.
The fundamentals are that blockchain-based and crypto-based financial infrastructure is superior to our traditional rails, and the service layers on top. In the long run, I think we're going to see blockchain being used extensively.
Miller goes on to say that he still believes crypto has a long-term future, but adds that there's so much more going on in the space.
Businesses that have a long-term view on the underlying technology, I think will be the ones that we see create fascinating products and use cases that we possibly can't imagine today.
Shark Tank celeb and crypto investor Kevin O'Leary reckons even if we do see a temporary backlash against all things blockchain, it won't last long.
The truth is the opportunity of what blockchain provides in authentication or what it provides in transfer of funds or payment systems is so disruptive that it'll be back on track as soon as we get legislation.
Kevin agrees that not all hope is lost for crypto.
Right now, it'd be good if crypto didn't drink anything for a while and stayed sober and just got to the place where we're regulated. It's simply not going away. It will never go away. The genie's out of the bottle.
As China's BSN systems gains users all over the world, there is only one question on everyone's lips. Can you be tracked with the technology? That is the focus of part 2 of the latest edition of Word on the Block, where Forkast Editor-in-Chief Angie Lau sits down with Yifan He, who's the CEO of Red Data Technology.
let me talk about the BSN DDC network inside China, because there's a very complicated law structure, regulation structure inside China to governing the internet. So the DDC network, all the blockchain applications on the internet is still under that domain. So some of the regulation actually talk about you need KYC, which means whatever activity data moves, you need to trace back to who moved that data, okay, by law. So that's why on DDC network we need basically make the KYC available, and also we can have some kind of power to disable some wallets. We cannot delay anything on the chain, okay, but we can disable some. So that's by law. We have to do that. Any business inside China building an IT infrastructure needed to, comply with those laws. No matter how big, the foreign companies, everybody needed to do that.
You can catch that interview on November the 21st. If you haven't already checked it out, part 1 is available to stream right now. That's it from us. Like and subscribe to this video for more content like it, and let us know your thoughts in the comments.